What is going on, guys? Today we have a great video for you. We are going to be discussing Visa stock. So Visa stock has had a competitor already announce their earnings, and it was massive, and it basically just got overshadowed, and the market didn't really care. And this meme relates perfectly to it. So stocks, they could always go lower. So Snapchat had some news come out that basically was negative, that sent everything lower in the market on Friday. But this other company that I'm referring to, that we're going to get into in this video, had some very good, very positive news out of their CEO. So we are going to go over that today. We're going to look at Visa, and then I'm basically going to give my opinion on what I think of the stock. Is it overvalued, undervalued, or a fair value? So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. First thing we are going to look at here today is Visa's chart. So what we have here is Visa was down 1.15%, and the whole market was down, but it's kind of surprising that Visa was down on Friday due to the fact of the news that we're going to look at here in a bit, and the positive earnings that we saw from basically one of their competitors. So with that, again, kind of surprised here that they were down this much, but Snapchat had some news that came out, and basically, the market overreacted to kind of some of that news because they're a tech company, and tech companies kind of are running the market right now. So over the last 5 days, they're up 1%, a little over 1%. Last month, up over 8%. Last 6 months, up over 5%, almost 6% there. And then the last year, this is almost like a peak to where they're at now. So you can see kind of the peak in here. This is around that 250 mark, which we're seeing a 52-week high of 252, all the way down to 185. So basically, they're kind of right in the middle there of those two numbers, a little bit, more towards the downside, and we're down almost 15%. So relatively, not down like the rest of the market, but still down quite a bit. But Visa is one of those stocks that if you look at the last 5 years, they've held up really well, right? With all the inflation concerns and everything going on, they fell off quite a bit, kind of went all the way down into the 190s, and then they've kind of started to stable out, around that 190 to like 215 mark is kind of where they're bouncing between. But other than that, in the last 5 years, really their only big drops were 2018 with the trade war, which, wasn't very significant. You can see we went from 150 all the way down to around 125, and then back in 2020 they went from 210 down to 150. So, and obviously that was a huge crash. Everything dropped through the floor. So overall, very stable company, a very stable business model from Visa. People have a credit card and they basically always use it. Cash is kind of out the window at this point. Most people like paying either with a credit card or with some sort of app now. So overall, very stable business model and very stable stock chart from Visa. So I did want to touch on something here with Visa's earnings. So we have Visa's earnings pulled up here with Google, and what's very interesting is, right, they've been beating earnings and revenue the last 4 quarters that they've reported. And actually back in Q3 of 2021, they actually beat by over 10%, which is crazy, again, especially for a business model that is very stable and seems like it would be very, very predictable. They're still beating consistently, which is absolutely astounding, and great to own companies that are like that. So what we can see, and what I'm most interested in here is the Q2 Q1 earnings. So they even beat there. Again, in Q2, they almost beat by 10%. They beat by 8.37 on EPS, and then beat by over 5% on revenue. So they don't actually report here until July 26th. So July 26th, what analysts are expecting is $1.74 for EPS, and then for revenue, $7.06 billion. And this is actually an increase from the last quarter. So last quarter they were expecting 1.65 and actually reported 1.79. And then for EPS, and then for revenue, they were expecting 6.83 billion and actually reported 7.19 billion. So these numbers are actually lower than what they ended up reporting last quarter, but they're higher than what analysts had expected. So I'm kind of anticipating them to come in, with this trend on a solid beat. But the question is, by how much? Are they going to beat by 10%, or are they going to beat, by a couple percent? So that's what'll be interesting to see. crazy. And let's go ahead and jump into some news why they will probably beat closer to that 10% number than by, like a 2 to 3% number. So the stock that announced some crazy earnings this week was American Express. So American Express actually came out, I believe it was Thursday after hours. Or it might have been Friday before the market opened. I'm not 100% sure, but basically they announced earnings and everything was positive about it. They had some big beats. We can see down here that they actually had a 6.6% beat on EPS, and then a 6.6% beat on EPS, and then a 6.81% beat on revenue. So what that actually came down to numbers wise is analysts were expecting 2.41 for EPS, and they actually reported $2.57. And then for revenue, they beat by almost $1 billion. So analysts were expecting 12.54 billion, and they actually reported 13.40 billion. So a big surprise there, a lot of big beats. But what's more crazy about that, and what we're going to get into here next, is basically what the CEO said about the company and about how he sees the economy moving forward over the next couple quarters. So the huge news that came out around American Express was not really their earnings. It was the fact that the CEO came out, and you can see in the headline here, he basically said, "I don't see it in my numbers." And he's referencing basically the fears of a recession. So exact quotes down here, and I'll read these off to you. "We're requiring spending and we see future travel bookings strong. So I don't see a recession, in my numbers at all. It's really hard for me to get my head around that in Q3 and Q4, we're going to have a big slowdown. But if we learned anything during the pandemic, you kind of go day to day, month to month. So as I sit here today, I do not see it." A recession, basically, is what he's referring to there. So this is absolutely, outstanding news from, a huge credit card company. He's basically saying he's able to track all the numbers, see all the spending numbers from consumers, see where people are spending their money, how people are spending their money, and basically look at everything in between. And he's coming out here and basically saying that he doesn't see consumer spending slowing down. And that's a huge positive because, basically at the end of the day, the way these companies are making money is by consumers spending money at their companies, right? People buying iPhones, people buying, going to the grocery store and buying, whatever food, people going to Target and buying, things that they basically don't need. So when consumer spending is high, it's overall going to be a positive thing for the market. And what we see here just adds on to that positivity. So sales rose 31% from a year ago, and spending on cards by AmEx members surged by the same amount. So basically people are spending the sales are up 31%, which is absolutely crazy, right? We're having all these talks about, people, we're seeing articles coming out that people are spending less, that they're going to grocery stores, but those articles never have any numbers backing them. It's just basically, people saying, in my opinion, I'm seeing, this slowdown. But this is AmEx, right? With all their numbers, all their data, everything that they're looking at, coming out and saying that we don't see a recession, coming about in the numbers. So that's absolutely a positive thing. The other couple points that I have here, so we have net sales, again, of 13.4 billion versus the expected 12.51 billion. So again, almost a $1 billion beat in revenue. And then diluted EPS, we have $2.57 versus what was expected of $2.39. And then also another interesting, very good thing to see is Amex actually rose their full sales forecast. So they rose their forecast from 18 to 20%, all the way up to 23 to 25%. So again, another huge positive there. A lot of companies, if you remember last quarter, were lowering their guidance, looking forward in a very negative way, but we're starting to see a turnaround, especially from, these companies, these, banks and basically credit card companies, where they're starting to have a more positive outlook into the future. And the question will be is, will that translate to some of these other companies? The big earnings that we need to, keep an eye on out for are, Apple's, Amazon's, UPS, some of those other companies that have earnings coming up here soon, that are basically going to dictate, and tell us even more information about how consumers are spending their money and if consumers are spending their money. The last thing I wanted to leave off in this video is basically looking at the valuation. So I'm not going to run any hard calculations on Visa stock, but what's always interesting again is to look at PE ratios and look at where we've been in the past, and then look at where we're at now and where I think we're going in the future, basically. So forward PE ratio currently is a 25 exactly, according to Yahoo Finance. What's interesting is a year ago, when everything was at its height, basically at 6/30, so last June, we were at a 32.57 PE ratio. So really, what's changed in there is the first thing to look at. The biggest thing that's changed over the last year is interest rates. So interest rates have gone up massively. And I've talked about this in a previous video. When interest rates go up like that, it's a lot harder for companies to borrow money to basically spend on growth, which Visa is kind of in a weird spot where they're not really a growth company. They're still seeing large growth numbers. Like we've kind of seen from their earnings, they're still seeing some of those growth prospects in there, but they're not really a growth company. They're not going to double, triple in size over a year. That's just not basically possible with Visa, especially with how large their market cap is. You could see almost $500 billion in here. $500 billion actually a year ago is where they were sitting at. So with interest rates going up, it's basically going to inhibit some of their growth. So in my opinion, I'm looking at Visa stock and I'm thinking it's probably sitting around a fair value, maybe slightly undervalued. I think Visa kind of likes to trade in that like 25 to 28 range. So it's kind of on the lower end of basically that PE ratio range where I am getting interested in it. The biggest thing for me is I have basically purchased shares of Visa over the last few years, and my cost basis is under $200. So personally, I really don't pick up any Visa shares until it gets down, into like the 190s, the low 190s. I'd like it, even below 190. I get very interested in it because once it gets down to, like 185 to 190, that's where it starts, the risk reward really starts kicking in. I think it's going to, continue to have positive growth. And then also the big thing with Visa, like we looked at the chart there, is it's a very stable business model. So it's really not a stock that you're going to see huge swings in. There's not a whole lot of speculation around it. Basically, as long as you can pick it up at a fair price, it's going to kind of go up a little bit over time, and just keep kind of creeping up. So overall, I like Visa stock. I don't think it's a bad price to add a few shares, especially if it's something you're looking to getting into. Maybe pick up a share and then just watch it, watch as it moves. And if it moves down, back into the $200 range, pick up a couple more shares. If it moves all the way down to like 185 again, pick up, start picking up a lot of shares and build out your position. And then, in my opinion, right, if it goes too much higher, if it goes up to, 220 or 225, I'm kind of starting to get a little less interested. I think there's a lot better prospects out there. So, but in terms of a safe, stable company, I think Visa is a great company. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.